Hey everybody, it's me, the Einstein on Wall Street, out front of the New York Stock Exchange on a beautiful sunny day, finally a sunny day. We're out here, the greatest financial institution in the world, with the greatest #1 tech analyst in the world. Am I allowed to talk about the ETF?
Yeah, of course.
There you go. Who has just launched an ETF under the auspices of Wedbush, was the company he works for. It's called Ives. That is the call letters, IVES. What is an ETF? An electrically traded fund. It is going to be a tech fund. It's got some of the greatest stocks inside of it. Obviously, stocks that Dan has been talking about for the longest time.
And it's all based on our Ives AI 30 list.
Okay.
The report.
Okay.
So our whole everything that we've talked about in the Ives AI 30 list.
Okay.
The 30 best ways to play AI, the derivatives, the fourth industrial revolution. The ETF is all structured based on our research.
Okay, so think about that. So I know everybody always asks, so when we talk about AI, right, we know obviously Nvidia, best of breed and all that stuff, but the derivative trade under the AI framework is like, so everybody's asking like, well, I can't really afford Nvidia, but are there any other stocks that are that are going to benefit from the rally of AI, right, in that space, that are derivative trades of that maybe I can get some money in? So the Ives, what is it called? The
Ives AI 30 list.
Okay.
From software.
Where is that? Is that something that you put out?
And we put out that in a research report. And we've talked about that the last few months. It's semiconductor,
right?
Software,
right?
Cybersecurity,
right?
Autonomous, obviously names like Tesla,
right?
Nuclear, names like Aqua. Because me and you have talked, our whole view, AI, it's not one name,
right?
Two names,
right?
It's
a massive
theme.
sector, right? Correct.
And that's really what we put together in the AI 30.
So that's so exciting. I mean, think about it. Look, if anybody's watching and they're trying to build a portfolio or learn about the stock market or wonder, because before I met Dan, I thought AI was like going to destroy the world, that it was going to outsource human beings. I had no real concept about it. You know, I know what I know, but there's so much more that I don't know than I do know. And so literally I thought it was like robotics and a bunch of stuff that's going to make people obsolete. By no means, it's going to better our lives in so many other ways. And what's amazing about Dan is in this AI Top 30 list, it's all the companies that are going to benefit and they are participating in this revolution. And we've talked about it, Dan and I, with you guys for over a year now, about the AI revolution. Okay, we're in the third inning, right, of the greatest industrial revolution in a space, in the sector that we've seen literally in decades, right? Obviously, best of breed Nvidia, but that's just the tip of the iceberg. And as Dan said, it's not just one stock or two, it's a whole sector. It's more than even a sector, and that's super exciting. So let's talk about where are we with Nvidia right now in the marketplace.
Look, I mean, I believe, as the US-China deal framework from Geneva has gotten worked out, Nvidia, to me, the de-escalation in China is a positive for Nvidia.
Okay.
Because the demand story continues to be massively robust.
Right.
The biggest sort of dent in the armor was they essentially, because of the restrictions, are handing their China business to Huawei.
Right.
Now with the de-escalation,
China government is handing it to Huawei.
Well, it's essentially because of the US restrictions.
Correct.
The Nvidia can sell their H20 chip.
Right, so let's go over that so people understand that. So if you'll remember, a couple of months ago, Mr. Trump came out and said that Nvidia could not sell one of their chips to China. Okay, now people didn't realize that it's actually one of the older chips. And so that chip is now being outsourced to Huawei. So they've lost that business, but they have way more chips on the horizon and already in existence.
And demand and supply is 10 to 1.
Okay.
10 people, 10 enterprises, for every one chip.
Wow.
So it just speaks to there's one chip in the world that's fueling the AI revolution.
Right.
It's the godfather of AI, Jensen, Nvidia.
Right. So look, that's unbelievable. Let's talk about the market for a while. We're in the middle of June. I don't even know how we really got here, right? We've talked for a while, right? And Dan and I we haven't chatted for a while, so I want to give you a little bit of an update. But so much has happened, and we are standing here on June whatever, and we are basically less than 2% away from record highs. How the heck did we get here? Maybe one of the last times we chatted, we were in the middle of that wild mini crash that we experienced from February 19th, record highs, until April 9th, right? I mean, think about that. We were down in the midst of April, we were down more than 20% in this market. I don't use the word crash lightly in any terms. I'm calling this one a mini one because it was fast, it was furious, it was aggressive, and we lost double digits in a short period of time. I did often say that the silver lining around losing 20+% over 11 weeks is that, you know what, we could probably go back that much in just as much time. And in fact, nobody could have predicted it, but we got back the whole 20% in half the time that we sold off.
Yep.
And that is unbelievable. What do you attribute that to?
Look, I think ultimately, and me and you talked about it, for months on CNN. It was really basically like U.S. walking back on the April 2nd, Liberation
Right.
Day. Tariff deals, at least a framework starting to happen.
Right.
The enterprise demand in terms of AI, robust and not slowing down.
And you're seen by Nvidia's earnings call and guidance and the
And tech earnings. I mean, it was a very strong tech earnings
right.
season.
Okay.
Look at Oracle's numbers last night.
Right.
So you're putting it together, and you're like, look, if they de-escalate, which they are,
Right. Now you're talking de-escalation on basically the rivalry between the United States and China within the trade war, as they're calling it.
And
So China is de-escalating the trade war.
U.S., China, both de-escalating.
They're both de-escalating. Yeah. They're in talks.
Because U.S. knows they need China.
Right.
China needs U.S.
Right.
And then what eventually is happening is U.S. and China, friends again.
Yeah.
Trump and Musk,
right?
BFFs again.
Again, right?
You're starting to see some hand holding.
Yeah, you know what? And I like that. So let's talk about it. We were down really bad in April, and I have to stand and mea culpa all over the place, because when we were in the midst of that downward spiral, I think, and we talked a number of times during that time. I was not sure. I talked about, are we going to look back at this time that we should have been a seller because it's going to get a lot worse? Or are we going to look back at this time as an opportunity to have bought the market? And I was wrong, because I was not able to put myself in the mind of Mr. Trump to know what his next move was. And I knew that we had broken down and fractured, right, and started to erode a lot of the confidence in the market, highlighted by Ken Griffin.
But I will say, you started to get optimistic a week before
it turned around.
Okay. Give credit where credit's due.
I appreciate that. I did not know that of myself.
Remember,
I thought I was
in
still
the
in
moment.
Oh yeah, we were having a kumbaya moment.
Think about it. That was a week before.
Wow. Okay, well that's cool then. Okay, then I'm sorry for what I did, and I'm happy that I did that. So that's good. Now, as Dan, I just asked Dan, so it caught very many people off guard. The sell-off was not caught anybody off guard. We saw it happening. It was happening in real time. It was self-inflicted. It was economic vandalism. It was all those things. We were on CNN with Richard Quest when he called it, in that beautiful heavy English accent of his, economic vandalism, right? But anyway, all that being said, the walk back up to record highs once again, I did not see that coming. And so if you wonder, we still don't have a lot of deals on the table, but a lot is in the works. And you know what? Just being in the works sometimes is just enough, right? The fact is, we are talking to China finally. We do have a date on July 9th with the EU. The head of the EU was the only and the first person to go back at Mr. Trump when he imposed a 50% tariff on the EU and say, you know what, Mr. Trump, we're ready to make a deal. The phone call happened almost instantaneously to the imposition of the 50% tariff. We are ready to make a deal, but we need a little time. Can you work with us? Mr. Trump respected that moment. He saw that somebody is willing to meet him on his ground, and he said, absolutely, you want to make a deal, we will, and you need a little more time. July 9th is the date, and we haven't heard about it since. July 9th will come and go, and we will have a deal. India, still in the works. EU, UK, UK, we have a deal, right? The UK, although they only represent 5% of our trading partners, but that's fine too. I think the most significant thing is that tech was robust, good looking out for the quarter. The market walks a wall of worry and likes that sometimes. It is forward leaning, and we do know, we said it over and over again throughout this whole time, that the downside potential of really it getting bad because of not having any deals is so dark that it's going to have a deal, right? That we are not going to let this go down the tubes as we hope. Now, let's talk about the Elon Musk and the Donald Trump bromance and the breakup of the bromance, right? I mean, I'm actually not sure whether this was sort of a planned little event just to kind of be, you know, still in vogue and be in the conversation. But maybe look, people fight, people make up. My mother and father were married for 67 years. My mother said the greatest advice I can give you to keep a happy marriage happy is never go to bed angry.
It's so funny. My wedding.
Yeah.
That was the advice that my aunt and uncle gave us.
No way. It's, you know, it's old Jewish wisdom, right? Never go to bed angry because you will wake up angrier, right? It's better to be happy than right. Never go to bed angry. I'm going to go out with that on the advice side. And it's funny. I interviewed a man named Brandon Dawson yesterday. Brandon Dawson is a partner of Grant Cardone, right? He's a partner in this company called 10X, which is a health company. It's amazing. He has actually had, I think, over 100 exits of over $100 million in his career. He has a new company where he's basically teaching $1 million companies. Think about this. It turns out that a majority of companies that get to 1 to 5 million in valuation fail, right? Because they don't know how to scale, right? And so he started a company to teach those small companies, the 1 to 5 to $10 million companies, how to scale to be $100 million companies. That is an art in itself. It was fascinating to meet him. He's probably a multi-bazillionaire, but he was like humble, and he was talking about democratization. Wow. It blew me away. I was intimidated. I hope he sees this. I was actually for the first time intimidated going into an interview, but it blew my mind what an amazingly humble guy he was, and I really look forward to doing great things. So anyway, where does that leave us today? Right? We're still at the crossroads. The market is less than 2% from record highs. I mean, do we feel that there's enough support? Now, let's talk about this. A lot of the market is underinvested, right?
100%.
Right, and I did not realize that. So think about it. A lot of people came in having pulled money out of the market pre-inauguration because they did not know what kind of a wild card. Go! Fantastic. So we did not know what kind of a wild card Mr. Trump was going to be. Okay, so a lot of people took their market money out of the market. Then we had the February 19th to the April 9th sell-off. They stayed away from that. And now they're going to have to play catch up because this market rallied unbeknownst to everybody, right to where we are now. And they're suddenly sitting there having not invested in the market over the last 12 weeks going, I need to buy some stock.
Look, and the risk off, I think a lot of, especially institutional, got caught off sides.
Yeah.
Retail held pretty firm.
Yes.
Institutional, I think really was a huge risk off.
Right.
In April, and now you're seeing...
They were as scared as I was.
Well, look,
because they did not know what we were looking at.
I was scared. I mean, we talked about it.
Yeah, you were talking about Armageddon.
Economic Armageddon.
Economic Armageddon.
So the point is now we're really starting to see institutional have to catch back up to retail.
So like today, if you look at the way the market opened down, when we see intraday reversals, I love forensically breaking down and understanding why markets do what they do. When you see markets open down off an emotional overnight thing, and then you see them rally back, so lower left-hand chart up to the upper right-hand chart, that is people buying with intent. That's people consciously investing in the market in a smart way. They are picking their spots. Right now, what's interesting about what you just said, that institutional got caught off guard, but retail did not. There was a day where they Moody's downgraded the market. We were down big on the Monday opening. The market rallied and closed high. It turned out that $4.1 billion was put into the market by retail.
Yep.
Retail apparently was not a big seller in April. So think about how far retail has come from the days, how you doing? From the days of the meme phenomenon. They got their ass kicked, right? They got their ass kicked a couple of years later too. The retail, what I'm talking about is that 50, 60 million new traders that came into the market around the time of Robinhood, Webull, guys who were suddenly had an iPhone and $100 could suddenly trade the market, but they were never educated about it. That was retail. Retail got their ass kicked because they never told the rules, right? We kept moving the goalposts whenever it got near, right? Now they've matured and they are like
I
a
agree.
fine wine, right? Amazing. So anyway, we're in a good spot. Right now, look, it can all change in a day. I think the market's too big to fail in a lot of ways. I think we've got a good foundation. We're starting to see IPOs almost daily. That's a good
Capital
sign.
markets is starting to open back up.
Exactly, and that's a good sign. That means that there's confidence back in the market. Ken Griffin said a number of weeks ago that he thought brand America had been eroded by the way Mr. Trump handled the dissemination of information during that April sell-off. I would bet he's not regretting what he said because that's what it felt like then. But things have changed. We do see a major turnaround in confidence, in consumer confidence, people getting back in the market. There is a reason to buy stocks again. I'm not telling you what to do, but I am telling you to look at what's happening. If you got scared off in April, come on back and check out what we're doing. The greatest of all time, the GOAT here, right? My man Matty, the Einstein on Wall Street. That's all I got to say about that.